You're listening to AI PRISM from Seoul Economic Daily.
If you're holding a Korean Semiconductor ETF, today's numbers show exactly where the money is going. Samsung and SK Hynix added 117 trillion won in cash this year alone. Investors are pulling money out of broad-chip ETFs and pouring it into funds branded Top 2. Short pause. The Kospi just closed at a fresh high, up more than 3.5% in a single session. It's Friday, August 14th. Let's look at what this means for retail investors in Korea. Korea's semiconductor sector is having its strongest earnings season in years. That strength is showing up directly in how retail money moves between exchange-traded funds. Fund flows this month reveal a clear preference for concentrated bets over diversified ones. Here's what the numbers show. Samsung Electronics and SK Hynix together added 117 trillion won, about $86.7 billion, in cash and short-term financial assets this year, a 73% average increase. Samsung posted 171.5 trillion won in second quarter revenue, up 130% year-on-year, with operating profit jumping 1,814%. Pause. Shares outstanding in Tiger Semiconductor. Top 10 fell 9.6% since late May, while the fund's net assets dropped 40.5%, from 15 trillion won to 8.9 trillion won. Investors moved that money into funds branded Top 2 instead, with first quarter K Semiconductor Top 2 Plus growing 111.4% in outstanding units over the same period. The Kospi closed up 3.56%, or 234.30 points, at 6,813.34 on August 13th, its fourth consecutive daily gain, led by Samsung and SK Hynix, up 4.89% and 5.92% respectively. The Bank of Korea disclosed a separate 350 billion won position, about $259 million, in a gold ETF, its first gold purchase in 13 years. So what does this mean for retail investors deciding what to hold? Earlier we said retail money is concentrating in Top 2 branded funds. That shift shows investors reading Samsung and SK Hynix's earnings as the clearest signal in the sector, rather than spreading bets across 10 stock baskets. If you already hold a broader semiconductor ETF, its recent underperformance versus concentrated funds is about fund flows and price moves, not necessarily about the underlying companies. What's worth watching next is whether this earnings-driven rally broadens beyond the two largest chip makers or stays concentrated at the top. That's today's AI PRISM Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.